Time now for a look at the day's top business news, and Brian Quinn joins me here in the studio from our business desk. And Brian, we're starting with a look at the markets as investors take in the latest moves from central banks and, of course, this war in Ukraine.
Indeed, Thomas, interest rates, stimulus programs, supply shocks from this war, a lot of factors weighing on investor sentiment as the trading week rolls into its final day here. European indexes regrouping as volatility across global markets continues amid this ongoing war in Ukraine. The FTSE in London opening slightly higher on the heels of the latest interest rate hike from the Bank of England on Thursday. CAC 40 here in Paris on the other side of the flat line as shares in French electricity provider EDF sink some 2% on news of a 3.1 billion euro recapitalization plan. The DAX in Frankfurt also in the red. Over to Asia, the Nikkei in Tokyo closed up around 0.2% as the Bank of Japan says it's maintaining its massive economic stimulus program there and keeping interest rates negative as it warns that the Ukraine crisis will hit raw materials costs. That decision contrasting with rate hikes from both the U.S. Federal Reserve and the BOE as Western economies struggle to contain rising inflation. Crude oil futures, meanwhile, back on a significant upswing as peace talks between Russia and Ukraine stall out. European benchmark Brent crude jumped 9% on Thursday. It's up another 1.4% so far today. Its U.S. counterpart West Texas Intermediate was up 8% yesterday. It's gained around another 1.7% as well. Traders worried about prolonged supply disruptions as fighting and sanctions continue, as is the OECD, which is warning of a global supply shock. Here's the Secretary General.
The impact on energy markets and prices is particularly acute. The global economy is now experiencing a massive energy price shock. Currently, gas storage levels are low, and the availability of additional liquefied natural gas is limited.
Well, meanwhile, new sanctions on Russia continue to mount as the invasion of Ukraine moves into its fourth week. Both Japan and Australia announced new measures targeting firms and individuals linked to the Kremlin. Tokyo sanctioning Russian individuals and defense firms. Canberra targeting 2 Russian oligarchs with ties to the Australian mining industry. Lawmakers in the U.S. House of Representatives, meanwhile, voted to remove both Russia and Belarus from America's most favored nation trade status. Once approved by the Senate, that move will allow President Biden to significantly increase tariffs on imports from the two countries. The U.S. is also seeking to get Russia and Belarus suspended from the World Trade Organization. Here's House Speaker Nancy Pelosi.
The legislation the House will pass today represents an intense action to further isolate Russia and decimate its economy. We will make it as difficult as possible for Russia to do business with the United States and our allies, and we will also suspend normal trade relations with Belarus for its shameful complicity in Russia's aggression.
Doubts have been growing over Russia's ability to repay its bonds amid Western sanctions on its central bank. It appears for the moment, however, that the country is managing to avert its first default on foreign debt since the Bolshevik Revolution of 1918. JP Morgan says it has processed $117 million in interest payments that were due on Tuesday, that after seeking approval from the U.S. Treasury Department. Russia owes another $615 million in bond interest payments by the end of the month, with $2 billion in principal due to be repaid by April 4th. The country has a relatively light foreign debt load of around $38.5 billion. That's part of President Vladimir Putin's strategy to insulate the Russian economy against sanctions. But a large portion of the country's $643 billion worth of foreign currency reserves has been frozen by the U.S. and European allies, complicating Moscow's repayment of dollar-denominated debt. Those sanctions on the Central Bank of Russia, though, do allow for dollar bond repayments until May 25th. Finally, for business, a different kind of bond market. Amazon says it has finally closed the deal to buy MGM, the iconic Hollywood studio behind the James Bond film franchise. The $8.5 billion purchase will see Amazon's Prime Video streaming service acquire the rights to more than 4,000 full-length titles, including the Rocky films and this year's Oscar-nominated Licorice Pizza. Amazon says there will be no layoffs at MGM. The merger, finalized after a deadline for the U.S. Federal Trade Commission to challenge it, expired. The move is expected to help the e-commerce giant to compete with streaming rival Netflix, as well as newcomers like Disney Plus and Apple TV. A lot of streaming options out there, Thomas, only getting more and more as time goes by.
Brian Quinn with the latest business news. Thank you very much.